everyone, it's Evan here from the Trade Risk on Tuesday, March 20th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So let's jump right in here with the S&P 500. Remember, we're still looking at the cash settled market here. Those are the charts we want to look at because the SPY ETF did go ex-dividend last Friday. That means that the SPY charts here are skewed about $1.25 to the downside, $1.25 to the downside, unless your charting software does account for those dividends. So be aware of that, though, if you are charting those levels. We're going to look here at the cash settled market, which is now the S&P 500. We're going to go right to that weekly time frame because we always like to start with that big picture. Each bar here represents exactly 1 week of trading. So when we look here at the landscape, you can see we are down early in this week. It is only Tuesday, but we're already down 35 handles here, 1.3%, and we're getting some follow through to last week's sort of outside reversal week that we put in. You can see we did follow through to the downside. Action yesterday was pretty ugly. We'll talk about that in a moment. And we are now sort of sandwiched in between this 8 period and this 20 period weekly exponential moving average here. From a trend perspective, everything is still holding up, right? When we zoom out, we draw our trend lines on these longer term bases. Everything is holding up, but we are now getting back towards this 20 period EMA, which is flattening out, and we're getting back towards these lows here. And if I want to be sort of with a pessimistic outlook here, I can look at this view, and this view really tells a picture of this could potentially turn into some type of really ugly bear flag here if in fact we start to lose and break down from this 20 period moving average and from this supporting trend line and taking out some of this supply. We'd have to lose around 26, call it 75 or so for this to really start to get into motion. You can see, in fact, even yesterday we did kind of test the lower bounds here of the, sort of this rising trend line on the weekly time frame, and we did see a little bit of a bounce here where we are right now. So going into the end of the week, this becomes an important perspective, an important chart to pay attention to. How does this weekly candle end up forming itself this week? If we do get a complete, or a further sell-off into the close of this week and we start breaking down here, again, that does not bode well whatsoever for even the longer term time frames. However, if we do say this is the bottom and markets do continue to bounce and we see some type of reversal, we start getting back above some of these moving averages here, then, we can work ourselves higher. And again, we could look at sort of this type of view and say, look, there's been about 3 weeks of highs here that this market has been unable to reclaim and actually close above. If we can, in fact, reclaim this 2790 level, 2785 level, then we are in good shape for the bull case for the time being. So that is a longer term perspective, but a very important one this week. It's something we want to be paying attention to as we get into Friday of this week. And now if we go back down to the daily chart and sort of look at what happened here, really this whole, the analysis really hinges on yesterday's action, which is about as bearish as you could have summed up or, really thought of or dreamed up of when we were talking about markets last weekend on Friday. Basically, if you followed last Friday's market or weekend recap video, we said, we really want to see buyers step in right at this 2740 level. That is where we would like to see buyers step in to keep this market as constructive as possible, for this to be a pullback here into some upper level support, into some of these moving averages here on the daily chart, above a lot of the supply that we recently traded, over the past February and March. And we wanted to see buyers kind of step in at 2740, put in some type of higher low, and then push us back up towards these highs to retest the past couple of weeks highs. That was the bullish scenario. That's what we would have hoped. But that is not what we got. In fact, again, we got the exact opposite here. We got a expansion in range, an expansion in volatility, an uptick in volatility, and a swift move lower. That is precisely what you do not want to see at these sort of important tests or important areas where we want to see if market structure holds or not. The most important index here, the Qs, is something that I was really paying attention to. I thought this was the most interesting setup to sort of tell the story this week, and it certainly told the story, and it's not a very pretty one here in the short term, because essentially what we got, if we look closely here at this price action, is what technicians would call a bearish reversal island top here, okay? And there's a lot of jargon there, and basically what that means is, if you recall back to this day here, Friday the 9th, Friday, March 9th, this was the breakaway day, the gap and go, if you will. So we gapped up above the prior highs here from late January and mid-February. These were the highs for the Nasdaq 100. We broke through them with authority, closed strong, continued higher until we started to reverse here on the 13th. That was last Tuesday. We saw this bearish engulfing day, and we kind of sold off and chopped sideways to slightly lower into the end of the week. And what we saw yesterday was the exact opposite of the March 9th bar. Instead of a gap and go to the upside, it was a drop and fall here throughout the session on Monday, creating this open gap here and 5 days of trapped supply up here. So everybody who transacted up here at these highs north of 171 is now underwater and had no real attempt or no real chance to sort of sell out of these positions at, you know, break even or intraday, if you will. They got sort of stuck up here on this island, and these can create some powerful reversals depending on where they are. And in this case, this is at a pretty significant spot given the fact it was a breakout to new highs, and now we've formed an island top here. So basically, you know, the way we look at this now going forward, again, it doesn't have to be doomsday. I'm not saying now we have to just, you know, completely fall apart here. Markets are always about probabilities, not guarantees. But what we want to see happen sooner rather than later is a fill of this gap. We want to see price stabilize here. We want to see if the bulls can get a rally going to reclaim this fast moving average and some of these fast moving averages and fill this gap in here and kind of close things out at 171. Ideally get back above 171. That is sort of the ultimate win here. That's the ultimate sort of bull case at this point, would be to reclaim that 171. And the longer it doesn't, the longer we stay below 171 here, I think the more credit the sellers have in their favor to potentially do some damage here or continue to kind of drop us maybe into this next level of support here, which was around 164. That's where we saw dip buyers step back in late, or actually at the very start of March. That would be the next sort of level to pay attention to. 164, it's only about 1% or 2 to the downside at this point. So for me, when I look at the Qs here, and again, this is almost my barometer here for the general broad market as a whole, I don't see any reason to be a hero here getting aggressively long, particularly the Qs. Again, you may find some individual stocks that are outperforming. That's all fine and good. But for me in the Qs, the broad kind of outlook here is there's no reason to be a hero until and if we reclaim this 171 level, we fill this gap and then start to push back above it. As long as we stay over here, the market's certainly in kind of a wait and prove mode for me as far as the bull case goes. And again, this could easily be a shakeout. You know, this could just be the final shakeout here. We saw it across all the major averages, maybe the S&P 500. You know, again, yesterday was the short-term capitulation. You know, we were already down sort of 5 days in a row. Then we saw this acceleration lower here. So in the short term, this could very well be some type of short-term bottom here. I'm saying, you know, when we think about risk to reward and we're starting to think about deploying capital as traders in at least the short term, let's sit on our hands a little bit. I think that's a reasonable thing to do, and let's just let the market kind of feel itself around these levels here. We're in the middle of this range. We just lost some moving averages. We get this bearish island reversal gap that's potentially in hand here. So why don't we just let the market kind of breathe a little bit? You don't have to trade every day. And again, this is getting very nuanced here and specific. Everyone's got different time frames and strategies. Have some exposure. Don't be a hero. Don't be fully aggressive. That's sort of the mantra, or at least what I would be thinking. My mindset as a shorter term active swing trader is to participate. We still have longs on, so we are still long this market, but not aggressively so. Not all in. Not on margin. Nothing aggressive to that effect. So that, I think, is really the story here. Is we want to respect what happened here on Monday. I think that was fairly bearish developments all around, and now we want to see what does this market look like at the close of this week. How does this weekly candle close itself out? Was Monday the final sort of shakeout capitulation here, and will we rally into the close? If that's the case, absolutely great. That's a good sort of short-term development there. But if we continue to roll over here, I think that's where things get pretty ugly and we start violating some bigger support, and then we get some slightly larger problems on our hand, or maybe resumption there of some increased volatility. So that's essentially the way I am looking at this market. Let me take a look here at my notes, see if there's anything else I wanted to cover before I go to the other markets. No, I think that's everything. And I think the levels, are pretty clear. Again, the cash market, we got, some plenty of room here, I think, for the Qs. Down here around 164, 171 to the upside. And the IWM, which we didn't talk about, which is in fact, by the way, which is important to talk about here, my favorite looking, of the major indices right now is the small caps here. I do think that, again, this behavior seems much more orderly to me. We had this nice run from 149 all the way up to new highs, and now we're pulling off of new highs here in fairly orderly fashion. We're still above a rising 20 period. We're back below the 8 period. But to me, I think this is definitely the most constructive looking index here. So if this starts to break higher, maybe this is enough to carry us higher and to start the next leg up. So I think the Russell here is interesting. I think, again, it's sort of best in class when I look at the S&P 500 and the Qs at this point. So do pay attention to that. If you're bullish, take a look at some of the smaller cap names. It's I think tends to be where a lot of our exposure is at this point, that we do have on the long side. So I think that's everything. So let's get into some other major markets here. We'll go to TLT next. You can see down 40 bips today. It was down yesterday as well. So this weekly chart, after a constructive weekly kind of bullish bar here, 1.61% higher last week. We're quickly kind of giving back a little over half of those gains right now. It is only Tuesday, but when we look here at the daily chart, we're starting to lose that 8 and 20 period, which was bullishly aligned. So bulls are going to have to step in here pretty quick if we are going to save this market here and keep the short-term trend intact. 119 or so, that was kind of a breakout-ish level here at the top end of this range for multiple weeks. So again, we want to see the bulls reclaim this really quick tomorrow, or particularly into the end of this week, if we do want to see some of this progress made last week keep itself together. If not, then we're just back in this messy range here in the context of a longer term downtrend. Next up, oil had a nice kind of bullish breakout day here, 2% to the upside. If we look at this weekly chart now, you can see taking out the past 2 weeks highs and really starting to try and take out the, really make new 5-6 week highs here. If we can get a strong close on this week, you can see here 8 and 20 period starting to line up and accelerate to the upside here. We got this pivot from the highs here back in late February on the 23rd. This is the 26th. That the market's going to contend with a bit, kind of pulled off of that level right around 1290 here in the USO. But so far, bulls getting some momentum here. I like it. I like the breakout. Don't have any, but I do like the developments there for the bull case. Natural gas did see a bounce today, but yesterday it was hit down 1.56%, still down about 85 basis points on the week here. You can see potentially trying to follow the reversal action from last week lower. We are still short natural gas. Talked about that position that we put on in our weekend video. We got short here on Thursday on this breakdown day on high volume. We did cover 50% of this position yesterday on the open when UNG was down, I think around 2% or so on the open. We're playing it via DGAZ. This is an inverse ETN for natural gas, a 3X. So we had about a 6% pop yesterday on the open. We covered half of that position, and we still have the other half on now. We did feel a little pressure today on the bounce higher in natural gas, but we did take some profits. We lowered our position, our risk in that trade a bit, and we'll look for action tomorrow. If we see continued strength and a move higher in UNG, then we'll throw this trade away and call it a small win. Otherwise, we'll see if we can get a little more out of this on a potential sort of rollover. So still have some shorts exposure there in natural gas. If we go to gold next, another position that we still have on, unsettling action today, 45 bips to the downside. Once again, really just kind of testing and grinding along this 124.25 level, which is held for all of 2018 now as support. Let's see again if buyers and dip buyers are interested in stepping in here. We got long back here on the 1st on this reversal day, right around this same area on Thursday, the 1st of March. And here we are again, kind of challenging that level. So close to our stop here. If it starts to lose this level tomorrow, accelerate lower below this 124 in GLD, probably be an exit for us for a loss. But for now, as long as this is trying to hold in here, we're going to give this a little more room and see how this acts tomorrow. So for now, gold still have this position on, but it's flirting with this important longer term support now. If it starts to give way, then I think we should clear out and expect some selling to sort of step in there for GLD. Silver is pretty much the same exact situation here. It's back to the lows, testing the lows from February and March. Different picture than gold. January, silver was up here. This started to break down a little bit earlier, and this is trading basically at the yearly lows here for silver. So not as optimistic here below, a definitively bearishly aligned and accelerating 8 and 20 period moving average. So not a lot to like there in the very short term, but it is at support. So again, like gold, let's see if buyers can step in here. A quick reversal tomorrow, take out these highs. Maybe you got kind of a false breakdown, final shakeout here, something to pay attention to into the end of the week. So that I think covers basically everything that I wanted to in this in the shortened sort of midweek recap video. Hopefully, guys are off to an okay start here, managing some of that volatility on Monday, and pay attention to those longer term charts. I think the close this week will be quite interesting. So thanks so much for watching. As always, you can subscribe to these videos on YouTube. It simply keeps you up to date with all of the latest that we publish. Tuesdays and Fridays are when the weekly recap videos are pushed out. So thanks so much, and talk to you guys on Friday.